Cindy. Hi, everybody. I'm Karen Tenenbaum Law here in Millville, Long Island. We're so excited to welcome you to the Suffolk Academy. Today, we're lucky enough to have Brooke Lively again, talking about from panic to profit and how to run your practice more efficiently. We started this How to Run and Grow Your Law Firm 2 years ago, and she was our first speaker. And it was my firm's 25th anniversary. And we built a beautiful practice here, a thriving practice, and we wanted to give back to the community. So we started this program, and we were lucky enough to be able to get amazing speakers and authors from across the country. So Brooke is here from Texas, and we're very excited that she's going to be speaking to us again. I believe the last time you talked about the 6 key performance indicators that you needed to know to run your law firm. I hope also everyone's going to join us next month on Thursday, April 20th, when we have Shelley Percadani talking about cybersecurity. And we're putting together a program, no date yet, talking about AI and Chat GPT. Seems that this is the newest, hottest, latest topic. So let's see, we've been introducing ourselves. The audio is a problem, a lot of echo. Okay, I don't know. Is everyone else having that problem? Okay, so let me go back here. Okay, so let me introduce Brooke. Brooke Lively is the CEO and founder of Cathedral Capital, a team of CFOs and profitability strategists who help entrepreneurs turn their businesses into profitable companies. We were just talking about that she helps firms grow, building a team, because she's writing her next book about how to sell your business. It's a valuable asset, and so I'm sure she'll mention some of that later. Brooke has been named the top 25 women to watch in the diversity journal Women Worth Watching and the Fort Worth's CFOs of the Year. She's been featured in major media, including Inc.com, CNBC, Forbes, US News and World Report, et cetera, et cetera, et cetera. And I believe that everyone has a copy of her PowerPoint. It was sent earlier today. And with that, I'm going to let Brooke take it over.
Awesome. Thanks, Karen.
And we even have more than that originally registered. I'm so excited about that.
Cool.
Yeah.
All right. So in 2015, I fired my biggest client. They were 94.3% of my business. That is a huge amount of revenue. I was left literally with $1,500 a month of revenue and 2 full-time employees plus myself. Over the next couple of months, oh no, that was 3 full-time employees, excuse me. I encouraged one person to leave. I fired somebody. And like many of you, I struggled to make payroll. I maxed out 2 lines of credit. I refinanced my house and took out all the equity. I maxed out my credit cards. And I remember the day that I applied for my last credit card. I got it. That's the good news. It had a whopping $900 limit. And the night it came in, I waited until 11 p.m. and I went to a bank on the other side of town because I was so mortified about what I was about to do. And I took a cash advance for every possible penny I could get. And then I was at the door of the bank when it opened the next morning to deposit that cash so that I could make payroll. And I was scared. I was petrified. And I was asking myself questions that some of you might have asked yourself. Can my business survive? And what if it doesn't work? And it was in that minute, in that moment, sitting in the ATM drive-through at 11 o'clock at night, that I kind of sat back in my seat and I realized I'm a fraud. I realized I was struggling with the same things our clients struggle with. And then the next morning, I was at the bank, sliding that stack of $20 bills out of the ATM across the counter to the teller. I wondered if she could tell my business was on the brink. And the big question was, on the brink of what? I own a fractional CFO company, and we spend all day helping law firms that are too small for a full-time CFO get the strategic advice they need to grow and be profitable. And here I was, I needed to hire myself. So now, instead of worrying about making payroll and wondering if I'm going to be able to keep my whole team, we are constantly hiring. In fact, we have hired people, it's what, the 9th? We have hired 3 people this month. Instead of trying to figure out if a charge is going to go through on my credit card, I'm fully out of debt. And instead of being scared that my company isn't going to make it, I am confident in the decisions I am making and that our profitability is going to continue to grow. I believe that every company deserves strategic financial advice to help them grow and be profitable. So over the next, I think I've got 35 minutes, right, Karen? Okay, reading lips, I think you said I've got 45.
Oh, I'm sorry. You have till 1:35. You have a total of 50 minutes.
50 minutes. Hot
The whole program is 50 minutes.
All right, so that means we got a little more time for Q&A. So during this time, I'm going to share with you the rule of thirds. And here it is. You ready? 1/3 of your revenue goes to people. 1/3 of revenue goes to overhead. And 1/3 of your revenue goes to profit. And I know that that sounds simple, but it's a little harder to implement than most people think. All right, so are you guys ready to look at that first third? You ready to look at people? So 1/3 goes to people doing the work. And this is all the people that work for you. And if you're still doing legal work, this includes you. And this is the place where firms most often overspend. When firms come to us, and just so you guys know, about 80% of our clients are law firms. And I would say another 10% of our clients are law firm adjacent, like witness prep companies or companies that answer phones for law firms. So when we first see firms come to us, it's not uncommon to see them spending 7 or even 80% of their revenue on payroll and employee costs. Now, everybody always tells you that you should pay the going rate in the marketplace. And I know that the marketplace is tough right now, especially for attorneys. But I'm telling you that you should create a comp package that is customized for your firm. The response I usually get is, hey, Brooke, that sounds great, but how exactly do I do that? So when we first start working with a client, we do what we call the profit finder. And we go over the results with our client. And we're working with one of our clients named Heather, and we ran the profit finder, and she was way over on payroll. So we started looking for the problems. And we looked at the way she was paying her people. Knowing that payroll needed to be about 1/3, we wanted to build comp plans where the billable people bill and collect about 3 to 5 times their cost of employment. So there are 3 types of attorneys. And it's not that the attorneys themselves are different. It's more like the evolution of an attorney. So here they are. They are the finders, the minders, and the grinders. Have you guys heard this before? Karen's kind of giggling. I can see Karen, I can't see the rest of you. It really is an evolution. You start out straight out of law school as a grinder, right? So let's talk about them first. Grinders are, to steal a phrase, they are bill baby bill, right? If we could chain them to a desk in a windowless room and make them bill all day long, that's what we would do, right? They have no non-billable responsibilities. A baby attorney And you guys have all have been baby attorneys, and you can look back and you were almost worthless. You graduated from law school, hopefully able to pass the bar, but you didn't really know how to practice. So some nice older attorney took the time to train you. You billed at a fairly low rate, and you billed a lot of hours. And we, as law firm owners, want a billable attorney, want a baby attorney to bill 75 to 80% of the hours they work. No one can bill 100% of the hours they work. It is unreasonable to expect them to. There is the time it takes when they hang up the phone with the client and they turn back to their computer and they think, okay, now where was I in drafting this petition? There is the time it takes to wander down the hall to find the file they're looking for. There's the time it takes to go get a cup of coffee. There's the time it takes to then go, to go to the bathroom later on in the day. It's what we call frictional time loss, right? You just can't bill 100% of your day. And if you have someone that's billing 8 out of 8 hours, I challenge you to really talk to them. It's not realistic. When we work with firms, one of the questions we get is, so what is a reasonable number of hours? We look for our younger attorneys in law firms to bill somewhere between 12 and 1,400 hours a year. You guys are in New York. You all know those big firms in the city that tell lawyers to bill 2,000 hours just to keep their jobs, right? Those associates know which partners have the really comfortable couches because they're fighting over who gets the best couch to sleep on for 3 hours a night. That's probably not the type of culture you want to build in your firm. So when we're talking about 12 to 1,400 hours, we're talking about asking your young associates to work 8 hours a day, to bill 30 to 35 hours a week, to work, we say between 46 and 48 weeks a year. And why do I say 46 to 48 weeks? When you're going, hold on, Brooke, you're a math girl. You should know that there are 52 weeks in a year. Here's why. They're going to take 2 weeks of vacation. All right, so right there, we're at 50 weeks. There are 2 weeks of federal holidays. So now we're at 48. And you're going, well, where'd you come up with 46? Karen, are you okay if I cuss just a little bit?
And I've been quoting you, not the cussing part, but I've been quoting you, life happens.
Yeah, I usually say
for 2 years. Right. Yep. I've been quoting you. Absolutely.
And it does.
Yeah.
Right.
Yep.
I mean, there's an extra snow day.
Yep.
Or you fly to Dallas to see your girls and they get a dusting of snow and DFW shuts down, right, and you can't get back from your vacation. Right.
Also, the young attorneys are all going to weddings and bridal showers and all those kinds of things. Life is happening. Someone's mother gets sick. Someone's mother gets sick.
Right. So let's set them up for success and not set them up for failure. So that's why we really encourage you to look at a 46-week year. Now, that being said, we want them to bill and collect, and that is very important, bill and collect 5 times what you are paying them. And it is not just their salary. It is their salary. It is the taxes you pay. It is their 401k. It is their insurance. It is their total cost of compensation. Now, before you say, wait a minute, I'm making so much money off of them and they're not getting anything. I want you to also remember that this is a baby attorney who you are teaching and training. A baby attorney's education does not stop when they graduate from law school. There is an unspoken agreement when a baby attorney comes to work for you. And that unspoken agreement is this: you are going to pay them a living wage. You are going to give them a job where they work a reasonable amount of hours. You're not a big New York City firm where they're going to be expected to sleep on a partner's couch for 3 hours a night and live in the firm. You're going to give them a quality of life. And in return, they are going to learn how to practice law. You're going to teach them how to practice law. So you're not going to pay them a ton of money. There's an exchange of value there. They're giving up a little bit of salary in order to get quality of life and to finish their education and to become an actual worthwhile member of the bar. Okay, so were you guys good on grinders and how to build a comp package for them? All right, so as a grinder progresses, as these baby attorneys progress, they start to become more self-sufficient. You don't have to redline every email anymore. They start to learn, they start to grow, they start to graduate. We're so happy they become a minder. And you realize that you can give them additional non-billable responsibilities. They can start to teach and train those baby attorneys. They can start to care for clients, right? Their billing rate goes up. Their salary goes up. These are great things. They're making more money. You're making more money. However, the amount of time they spend billing is going to go down. Why? Because they're teaching and training, because they're caring for clients, because they're taking some of the responsibility off of your plate, right? Because of this, their multiple is going to fall. Now, it is not going to fall as much as it would because their billing rate is going up, right? Billing rate goes up, salary goes up, and hours fall. So those kind of offset each other. So we're looking to get a 3.5, preferably a 4x multiple on your minders. Now, this may be your managing attorney. This may be your senior associate. And then there are the finders. And I'm going to guess that a lot of you on this call are the finders. Karen, you are the finder in your firm. It is your job to go out in the world, club potential clients over the head, drag them back to the firm by their hair, and deposit them in the laps of the minders, right?
Absolutely.
The minders are going to take the work, they're going to do the strategy on it, they're going to allocate the work out to the right people, and they're going to teach and train the people in your firm. How much do you bill, Karen? Not very much. You're going to do strategy on the complicated things. You're going to bill that out. Your billing rate is going to be through the roof. Your billable goal is going to be really low. So what happens with that? They offset each other a little bit. Your multiple, hopefully on a finder, is about 3x. That's our goal. 3x the cost of employment. Okay? So as you're building your comp plans, these are the things you want to think about. Are you customizing your comp plan for your firm? So we went through this with Heather. We redesigned some of our comp plans. We reran the profit finder, and she was still spending too much on her people. We're like, okay, so Heather, you've done part 1. Now there's part 2, and it's in accountability. So we designed comp plans based on assumptions. And the assumptions were that they were going to bill. So now we need to hold them accountable to make sure they're billing. And we do that using 3 things. We do it using tools, discussions, and discipline. So let's look at the first one, tools. There is a great book by a guy named Gino Wickman. It's called Traction. And I don't know if any of you have read it, but it really is fabulous. And one of the things that he says in it is that everybody needs a number. And he's right. Everybody needs a number. Everybody needs a KPI, a key performance indicator. And I don't care what it is. I like hours. I've always been an hours kind of girl. The billable hour was invented by the guy that ran legal aid in Boston, like over 100 years ago. He invented it not as a way to bill, but as a way to track his inventory. And your inventory as an attorney are your hours. The hours that you have that you can bill. That is your asset in a law firm. And that's why he came up with the billable hour. He's like, how much do I have to sell? How much of it am I selling? And what am I collecting for what I've sold? And for that, it can't be beat. However, I understand that there are a lot of attorneys that don't like the billable hour. That's fine. Pick a stage. You have to, or an activity, I don't care what it is. You have to move X number of your cases into this stage every month, or an activity. So I was working with a firm in the Midwest, and they were personal injury, and they had to send out X number of demand packages. What is that one key stage or activity in your firm that moves your cases forward? Karen, what is it for you? What is that one thing? Is it initial contact with the IRS?
So it's interesting you say that. So it's getting the documents from the client, putting together a package and sending it out to the government. And we always say we want to do that within a week. Within a week, we want to have everything moved to the next stage. Exactly that concept.
There you go. So that's, it's getting that done. For some clients, we use time on desk. So Karen, that's actually what you're talking about, is you've got 7 days to get this done. We've got clients where we've instituted kind of a traffic light system where you're green. If you get it done in 5 days, that case turns yellow on day 6 and 7, and on day 8, that case would turn red because it is now overdue. So, time on desk, and our 80% of your cases green. So, I don't care what it is. So we were talking about all of this with one client. He's like, I don't have one activity. I've got this and I've got that, and they're all. And so eventually what we did with him is we came up with a point system, and everyone had to have X number of points. I think it was totally complicated. It was a pain in the rear to manage, but it was what he wanted. So I don't care what it is, but everybody needs a number. So what tool are you using? What number are you giving your people? The next is discussions. You have to have a weekly meeting. You have to discuss if they are making their number or not. And here's what that discussion looks like. You use the same agenda every single week. What were last week's results? Did you or did you not make the goal? If they did or they didn't, what were all the obstacles? They didn't make it. Why didn't you make it? And you just ask them, and what else? And what else? And what else? We call it the AWE question, AWE, and what else? And you just keep asking why they didn't make it until they have run out of excuses. The dog ate my homework. When they get to the dog ate my homework, you stop. If they made it, you do the same thing. Why did you make it? And what else contributed to you making it? Because it is just as important to document and understand why you make your goal as to understand why you didn't. Because you want to figure out what it is that is helping them make their goal, so you can make sure that it gets repeated every week, week in, week out. So you get all the reasons down, and then you read them all back. And in the case of I didn't make my goal, you say, okay, choose the one that was the biggest impediment. What was it? And they choose one. So they choose it. You guys are bright enough. You teach and train on that one item. Don't try to pick three. One thing. And then you ask them the final question. What are you going to commit to doing in the coming week? Now, it should be something that you just taught and trained on, right? Now, next week, you're going to come back and you're going to do the whole thing over again. What were last week's results? Why did or didn't you make the goal? You're going to add in, did you do your commitment from last week? And you're going to keep going. Here's the thing about this meeting, this discussion. You'll notice that they are supplying all the problems and they are choosing the biggest problem and they are choosing the solution. You're getting their buy-in. Okay. This brings me to the third part. Discipline. Discipline has two parts to it. The first is the discipline to enforce the standards. You got to have consequences. I was having a sales call with a guy who was actually in Canada. And we were talking and he's like, oh yes, everybody has a number. I'm like, okay, great. Tell me about someone who hasn't made their number recently. So he started telling me about one of his attorneys. And I was like, okay, so when was the last time she didn't make her number? And he started laughing, kind of like maniacally. I'm like, okay. Why are you laughing? He was like, well, it would be better to tell you the last time she did make her number. Like, what do you mean? He's like, oh, she hadn't made it in 16 months. Well, what are you doing about that? He's like, well, I tell her to make it next week. I'm like, yeah, no, that's not actually what you're telling her. What you've told her is there is no consequence and there is no reason for her to make it. You have to have consequences.
Like what? Like what?
One more time, Karen.
What are the consequences?
The consequences are, I'm going to fire your tuchus. Look, if they're not producing, if they're not paying for themselves, if they're not paying for their overhead, get them off your payroll. They are costing you money. I know that attorneys are in short supply. I know that it's hard to fire someone. I know that you guys are all justifying that, you know, someone who can fog a mirror with a license is better than no one, but I promise you, they aren't. And they are dragging down the morale of your team, and your team will thank you if you get rid of them. Here's the second part of discipline. You have to keep it up. So we were bringing a new client on, and one of the things we do is we ask for a 1-year commitment to us, and we do it for a couple of reasons. And, you know, we weren't that adamant about it at this point, but for some reason with this client, we're like, okay, we really need to be. Something told us, you know, like that little tingly sensation. And his controller called us and said, I am so glad that you guys insisted on 1 year. And we're like, huh, that's interesting. Tell us more. She said they brought a lot of consultants in over the years. They've gone to a lot of conferences and brought a lot of ideas back. And the team has learned that they'll get bored after 3 to 6 weeks, and they'll move on to something else. So if they can last just 3 to 6 weeks without changing what they do, they won't have to. So you will never get lasting change if you don't keep at it. So you have to have the discipline to keep going. All right. So just like with Heather, who identify the problems with the profit finder. Here's some specific steps that you guys can take today that will help you make your people more profitable. So the first is calculate the multiple of each of your billable people. Redesign their comp plans if they're too low. Are you getting a 3 to 5x on all of your people? And the second is give everybody a goal and use the agenda I just talked about. Hold them accountable each week. More work will move through your firm, which means more revenue and more profit coming your way. All right, let's go to the second one, overhead. You guys all went to law school because you were promised no numbers. And yet, most lawyers end up either owning their own firm or in a leadership position in one. And many of the clients we work with tell us that the numbers is the place in their role where they feel the least confident. And that's why we find the profit finder so helpful. It does the math for our clients and it gives them a report that lists in words in their preferred method of communication, what's happening in their firm and how to fix it. So in the profit finder, we separate overhead into two sections, marketing and everything else. So I want to look at marketing first because that's a hot topic for most firms and it's where all reason seems to go out the window. So depending upon the size of your firm, you should be spending between 5 and 10% of your revenue on marketing. Gonna let that sink in for a second. Smaller firms at 5%. By the time you hit $1 million, you're gonna max out at 10. Now, a lot of clients panic when we start looking at cutting their marketing budget. And we were working with a client who we met at when I was giving a speech, kind of similar to this one, and his marketing spend was well over the 10%. Think double or triple that number. So we took a look and decided that we should cut his digital budget by about $10,000 a month. And do you know what happened? Nothing. He had the same number of leads coming in he did before, but now he had an extra $120,000 to either spend in his firm or to take home as profit.
So what do you include in that marketing budget? It doesn't include just like Google ads, outside consultants, or the people that are working in your firm that are on that payroll?
That depends upon the size of your firm.
Let's say $1 million firm.
So $1 million firm, we're starting to bring in the people. Yes.
So it includes.
It's going to start to include your marketing people. Yep.
And so you think the 10% is the
10%.
Okay.
So the natural question here is, hey, Brooke, how did you know to cut digital marketing and not something else? And it's because we looked at the ROI, the return on investment. And here's how you do it. Divide all your clients, all your revenue by acquisition source. If they came from Facebook, label them Facebook. If they came from a professional referral, label them as a professional referral. Divide your marketing expenses the same exact way. Now here comes the math. Are you guys ready? It's a little more complicated than finding 1/3 of any number, which I know is the math class they taught you in law school, but you can do it. Divide the revenue by the expenses, and you're going to get a multiple. Now, I know that some of you are going to say, for example, you're a PI and your cases last 18 months. If you want to divide this month's revenue by your marketing spend 18 months ago, you can. However, I say just do it by today. Here's what you need to know. If something has a multiple of 3 or less, cut it immediately. Remember the rule of thirds. If you're spending 1/3 just to get the case, you aren't ever going to make your multiple. Eventually, we want everything to have a multiple of close to 10. But what you're going to do is every month, cut that lowest performing campaign or spend, because this is going to drive up your average multiple, which drives down your percentage spend on marketing. And that was how we knew to cut Sam's digital budget. Now let's tackle the second part of overhead, that everything else. So Here are the areas where we see problems. Too much or too expensive office space. If COVID taught us nothing else, it taught us that virtual works. If clients don't come in, you don't need Class A space. Take a look at your office. The second place is forgotten recurring charges or subscriptions. Think about that gym you joined, in the new year in 2015 that you haven't been to since. In your business, it looks like when you got a new piece of technology and you ran both of them next to each other, and you forgot to cancel the first one once you got the new one done. It's a free trial that expired and somebody forgot to cancel it, or it's frankly just things you no longer use. Technology is a big one. What's no longer necessary? And what pieces of technology can be integrated to ease use? And then my final piece of advice is take a step back and look at your technology as a whole. For most firms, when they start, they go out and they start looking at technology. And especially if you've come from a large firm, you go out and you look at that big Mac Daddy software that your firm had, your big firm, and you're like, "Ooh, that's so cool." And then you see the price tag and you're like, "Ooh, I can't get that." So you get something else, and it does part of it. And then you get a little more money and you get something else that does another part. And then you stack and you get something else and you get something else. And this is how you build what's called a technology stack, right? Well, turns out that technology stack can be more expensive than that big comprehensive solution. So sometimes it's good to take that step back and look at all of your technology and see if there's an integrated solution that might be less expensive and actually run smoother for your team. And then the last one is coaching costs. And this has two parts to it. The first is who benefits? Is it the business or is it you? So I had a client that came to me. We see a lot of coaching costs, right? And I have people tell me all the time things like their marriage is better, they started eating healthy and they feel better. And that's great, but they're benefiting and not the firm. And I literally had a client that came to me and when I was like, "Dude, what is this $100,000 going to?" "Oh, Karen, who's the guy? I am not your guru." What's that guy's name? I don't know. One of the big coaches. And he's like, "He saved my marriage." I was like, "Yeah, but you're not benefiting. You're benefiting, not your law firm."
Someone wrote Tony Robbins.
Tony Robbins. Yes, it's Tony Robbins. I'm like, that's great. Tony Robbins is benefiting and you are benefiting, but your law firm is not. That is really a personal expense. I'm not saying don't run it through the firm if you and your tax accountant are okay with it, but let's be clear about who the beneficiary is. And then the second one is, what's the ROI? Take the total costs, and that includes travel and the opportunity cost of not billing, and divide it by your increased profit. I was having a call with somebody at one point that I'd met after making a speech. I ran the profit finder for her. We're going through and I saw a lot of coaching. By the time I added all the travel, it was a lot of coaching. And she said, "Yes, but my revenue is up by $300,000 last year." And I said, "Yes, but since you added the coaching and your revenue went up, you started to run a loss. And so not only is the coaching not making you any money, it's not even paying for itself." So take a look at that. All right, things you can do.
All right, before you do that, I just want to give the code so everyone can get CLE. It's 908U, 908U.
Okay, So 2 things you can do: calculate the ROI of each of your marketing activities, cut the least productive one. And the second one's easy. Grab your credit card, go through and see what recurring charges are on there that you can get rid of. All right, let's look at profit. This is the one that ultimately business owners care about the most. And as a CFO, it's the one that I care about the most, because I want you as the owner to be properly compensated for the time, the effort, and the risk you're taking on as the owner of the firm. Every month that goes by without fixing your profitability problem is another month you're going to struggle with cash flow. And every month that goes by without fixing your profitability problem extends the time your family doesn't have everything it needs. And most importantly, every month that goes by without fixing your profitability problem, until you resolve that, you are delaying your ability to retire or sell your firm. And that's the one that frustrates me the most. Okay. For those of you that don't recognize this, this is your P&L. This is your profit and loss. This is your income statement. Revenue minus expenses equals profit. When we designed the Profit Finder, we did a few things with the profit section. And what I want you to realize is that you shouldn't take all of the profit. It should be divided into 3 buckets. The first is taxes. Karen knows all about this. Profit is the number the IRS cares about. And the first thing you need to do is reserve a percentage of this to satisfy the IRS, because they always get their pound of flesh. Right, Karen? All right.
That's what keeps me in business, right?
What keeps you in business, and Karen, as much as we like you, we don't want to keep you in business. The rest, if we want other people to keep you in business, the rest gets divided. Part needs to be segregated into a second account as a war chest to take advantage of opportunities. And the rest gets distributed to the owner or owners. And that's a fine balance, right? How much goes to war chest? How much goes to distribution? And the answer lies in the middle. We usually say 50-50 as a starting point, and then we start to kind of massage it to the individuals involved. Let's talk about the war chest. Your firm is probably the biggest asset, definitely the biggest wealth creator. Whoops. Biggest wealth creator you have in your life. Having money sitting in an account ready to deploy as opportunities arise is what's going to help you create that wealth. So here's some good uses of that cash. New marketing. Always good. If you're contingency, you know how hard it can be to fund cases. There are lenders out there that have low-cost lines of credit whose effective interest rate's well over 20%. If you're hourly, there are contingency cases that come along a few times in your career that can actually secure your retirement. Being able to replace that lost hourly billing while you work on a contingency case is huge. And then, you're going to distribute the rest of as profit. But I want you to understand there's a difference between the profit you distribute and total owner compensation. And when we run the Profit Finder for our clients, we actually run it every couple of months to use in our discussions. We want to look at total owner comp. And that's made up of a few categories. The salary you get working for your firm, all the personal stuff you run through, and no judgment on that. Everybody does it. As long as your CPA is good with it, so I couldn't care. And then your profit. If your firm is over $1 million, we want total owner comp to be about 35%. If your revenue is less, you should be getting a larger percentage. So here's my question. Are you getting that? Do you even know? And I know that sounds like a wide range, and I can let you know the specific percentage for your firm after this if you want. Okay, so things you can do to monitor your profit, things you can do to impact profit. First one is do the math and monitor your profit. Is it rising or is it falling? And does it satisfy your needs? And the second is calculate your owner compensation. How much are you actually benefiting from your firm? Okay, so I'm going to do an exercise, and we're going to do this in 35 seconds, okay? And then we're going to do questions. So, and then I'm going to wrap up after we do a couple of questions. And I can stay on a little longer after the recording for more questions if you want. I want you to think about the things we've talked about. And, you know, every time I do this thing, people have questions. So just write your questions down. But the exercise is this. I want you to envision what your firm could be like. And then I want you to write down the actions you need to take to put you on that path. And we've talked about some of them today. So like, think about the rule of thirds. 1/3 goes to people, 1/3 goes to overhead, 1/3 goes to profit. What are your next steps? What can you leave here today and do that'll move you forward? The language of CAFCAP, what's going to help you climb your mountain? Is it looking at your comp structures? Is it getting your credit card out and seeing what needs to be, you know, what we need to cancel? Is it reworking your marketing so that you actually understand where your clients are coming from? And reworking so you know where you're actually spending your marketing money. So I do want to start with the question I get asked the most, because I always get asked this question. So I'm just going to start with this one. And it usually goes something like this. Brooke, what do I do if I'm not getting the right multiples for my people? I can't just cut their pay. And you're right, you can't just walk in and say, dude, I'm paying you too much. You're going from $150,000 a year to 50. Doesn't work that way. But here are some strategies. Look at bonuses. Are you bonusing them to do what you want them to do? If you want them to bill, look at cutting their salary, but creating a billing bonus where if they hit their numbers, they'll actually make more money, but you'll get the multiples you need. And show them the calculations, right? Show them how they can make more money. See if you can raise their billing rates. When was the last time you raised billing rates? Can you raise their billing goal? Do you need to enforce their billing goal? And then ultimately, attrition is your friend. You are going to have turnover in your firm. And the best thing you can do is just start putting in comp plans going forward that are really built for your firm. So you might not be able to fix it all at once, but a tweak here and a tweak there helps. And then natural attrition will take care of the rest. Okay. I don't see that anybody has a question, so I'm going to keep going. If you think of a question, let me know. So one of the most common questions I get is, Brooke, can you help me get control of my numbers? And yeah, so here's the first step. At the end of this, I'm going to put up a QR code that will connect you to a special link that goes to the Profit Finder assessment. And this is the one that we use with our clients. And it will show you exactly where you are overspending, and it tells you what to do about it. And what it means for you and your company is that you've got an actionable plan to create more profit, more money for you and for your firm. Now, I will say it asks it asks for a bunch of info. So when you sit down to do it, you need to have your P&L in your hand. Okay. I want you to picture a day when your accountant calls and says, I've never seen such a profitable law firm. Picture a day when you look forward to walking into your firm because you own the firm of your dreams. Whether you're struggling to pay your bills, are finally profitable, or even if you've been profitable for years, the Profit Finder will do exactly what it says. it will show you where to find more profit in your firm. So, I had a toilet that was leaking in my house recently, and I thought, I'm a woman, hear me roar. I can fix this on my own. So it took a really long time, all day. And I made a huge mess, and the stinking toilet still leaked. So I called my cousin John, who does this all the time. And he came over, and he did it quickly, and it was clean. And he obviously did a better job because it was no longer leaking on my floor. Hiring a professional made all the difference. Many of you have been trying to run your firm on your own, probably for a long time. And if you're honest, it's been pretty messy, and there are a lot of leaks. Hiring somebody who does this all day means it's clean, it's done quickly, and frankly, they're better at it. And the profit no longer leaks. Hiring a professional makes all the difference. So I'm going to leave you with one last thing. You deserve a profitable firm where you know your numbers. You deserve a profitable firm that consistently grows each year. You deserve a profitable firm that enables you to live the life of your dreams, because you deserve a profitable firm. Okay, here is the QR code. And you can also, down at the bottom there, it says cathcap.com/SCB. If you can't get the QR code to work, because I got to tell you, sometimes my phone does not scan the QR code very well. You can go to cathcap.com/SCB, and you can access the profit finder there. So does anybody have questions? Karen, do you have any questions?
This was wonderful. I have to say, well, again, you were our first speaker, and I learned so much the first time. It's now reinforced that we're actually doing a lot of the things that you recommended. We've applied the KPIs, a lot of these things. So I thank you. I think this was wonderful. It was re-education, reinforcement.
You know, it's amazing how getting some of these basic things done will make an amazing difference in your firm.
Yeah, we've always kept track of where the business comes from. I think that's key also. You know, we get a lot of referrals from accountants and attorneys, and we also now have a digital marketing person, so we see how much is coming from the website. And we always say, you know, if it's a warm lead, if your accountant says, oh my God, you have a residency matter and you must hire Karen, you know, chances are you're going to hire Karen. So the conversion rate is better than if you're a cold call from the website. But we're working on, you know, making that even better. So it's exciting.
And one of the things that we track is the conversion rate from warm leads like that. And there are times when we've noticed that a particular lead is not converting, a particular lead source doesn't convert. And what we've realized is that they're not sending us ideal clients, and we needed to go back and say, you're not sending us the right clients. We need to re-educate.
Right. Sometimes the marketing message is wrong.
Yeah, it's fascinating.
All right, you got a few things in the box here. Let's see.
Thank
you for your excellent presentation. Very interesting and useful. And then someone saying that the profit finder, when you click it, it gives you an error message.
Okay, so I'm going to say go to cathcap.com/SCB and try to fill it out and see what happens.
This was excellent and wonderful. Everyone has your contact information so they can speak to you after this presentation.
Absolutely.
And I thank you again, as always. It's a pleasure, you know, working with you, really. It is.
Well, thanks.
Yeah. All right, everybody. This was wonderful. We'll speak to you. Hopefully you'll join us next month, April 20th, when we have Shelley Percadani talk about cybersecurity.
Okay, and I will get this link fixed. Give me about an hour.
Great. All right. Good to see you.
Thanks.
Take care, Brooke. Bye-bye.
Bye.